Welcome back, my friends. The news today is that Microsoft says cloud AI demand is exceeding supply even after 79% surge in capital spending. Microsoft's demand for consumption-based artificial intelligence services in the cloud is outstripping supply, Chief Financial Officer Amy Hood said on the company's earnings call. The company will again materially bump up capital expenditures in the current quarter, she said. Capital expenditures jumped 79% from a year earlier to $14 billion in the latest quarter. Microsoft earnings jumped on artificial intelligence demand in the Microsoft cloud. The software giant is spending billions of dollars to integrate artificial intelligence into many of its products. The tech giant's quarterly results included strong growth in cloud computing, fueled by its services in generative artificial intelligence. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Microsoft is increasing spending at a rate not seen since at least 2016. It still might not be enough. In its earnings report on Thursday, Microsoft said capital expenditures jumped 79% from a year earlier to $14 billion. The company is spending much faster than its increasing revenue. Sales climbed 17% in the period. Even with all that investment, Microsoft has a shortage of data center infrastructure, specifically for deploying artificial intelligence models. We do have demand that exceeds our supply by a bit, Microsoft Chief Financial Officer Amy Hood told analysts on the company's earnings call. Microsoft gave more signs on Thursday that its hefty investments in artificial intelligence were beginning to bear fruit, as it reported a 17% jump in revenue and a 20% increase in profit for the first 3 months of the year. Revenue was $61.9 billion, up from $52.9 billion a year earlier. Profit hit $21.9 billion, up from $18.3 billion. The results beat Wall Street's expectations. A year after Microsoft began its push to put AI into everything it does, the company said sales of its flagship cloud computing product, Azure, had grown 31%. More than a fifth of that growth came from its generative AI services, which include selling access to technology developed by its partner, OpenAI. In recent quarters, Microsoft's AI push has helped it gain market share from Amazon, the leading cloud services provider. In January, the company said 53,000 customers were using its cloud AI services, with a third of them new to Azure. Companies need an ever-increasing amount of computing power to run hefty workloads, adding human-like generative AI features to their products. It's a boom that was kicked off by OpenAI and its ChatGPT chatbot, and Microsoft has followed suit, adding assistance to the Teams communication app, Bing search engine, and other services. The technology can summarize meeting transcripts, compose emails, and explain information from the web. Microsoft isn't the only AI hardware vendor with a supply challenge. NVIDIA, the biggest developer of processors for training and deploying generative AI models, has been supply constrained, with revenue more than tripling in consecutive quarters. Now Microsoft, one of NVIDIA's major customers, is feeling the stress. During the fiscal third quarter, revenue in Microsoft's Azure cloud rose 31%, with 7 percentage points from AI. Hood said the capacity issue might have affected AI results and will have an impact in the fiscal fourth quarter. A supply limitation means Microsoft has less available capacity to rent out to clients for deploying AI models at the inference stage, she said. Azure is key to Microsoft's future, contributing tens of billions of dollars in revenue every quarter, and growing faster than most other parts of the company. Within Azure, AI services stand out as a highlight, attracting new clients as Microsoft goes up against Amazon Web Services. Hood said capital expenditures will increase materially in the current quarter, mainly for cloud infrastructure, and she called for higher capital expenditures in the new fiscal year, beginning July 1st. Microsoft intends to scale to meet the growing demand signal for our cloud and AI products, she said. Tesla and Microsoft presented two distinct versions of AI. Investors liked both. Investors were treated to two different versions of artificial intelligence this week, and both sound pretty good. Microsoft, MSFT, announced a partnership with Coca-Cola, KO, in which the soft drink king would pay $1.1 billion to jointly experiment with Microsoft's new Azure AI-based version of its cloud-based suite of productivity software. And when Microsoft's quarterly results showed AI driving more and more of its cloud business growth and bullish guidance from an enthusiastic leadership team, the stock rose 2% Friday. Alphabet, Google had a similar story, but with a stronger investor reaction, up 10% Friday, as investors reconsidered the company's second-place position to Microsoft. Now it seems YouTube, search and cloud businesses are strapped in and ready for their AI-ification. On the other side of the table was Tesla's, TSLA, earnings presentation. The company doubled down on its endgame of fully autonomous vehicles, a robotaxi fleet licensing self-driving tech to other automakers. They're in conversations, Elon Musk said, and the potential of harnessing the AI computing power of parked Teslas to create something akin to Amazon's AWS. A bold but old idea that has been floating around since the 1980s. These are two very different visions of an AI future. Productivity software certainly doesn't have the same ring as robotaxi, which is on the fun end of Peter Thiel's "We Wanted Flying Cars." Instead, we got a 140 characters spectrum we discussed 2 weeks ago. But as our chart of the week shows, investors liked both of them, and they should. Tesla's surge was partially about rebutting some reasonable investor fears, cutting costs to tackle lagging demand, and reaffirming that cheaper EVs are on the way. But the bigger story was the self-driving AI vision from the grand visionary. This is rare, and it's why some people love Elon. For the most part, the path of AI first runs through the tedious corporate world of programmatic advertising and productivity tools, the core businesses of today's big AI software cloud players, Google, Microsoft, and Meta. On the other hand, Tesla's splashy self-driving future of consumer cars and robotaxis is far more aligned with the change-the-world big tech aspiration really, than the better Office 365 reality we so often see. Big tech companies are planning to spend hundreds of billions of dollars over the next 2 years in their race to lead the next generation of artificial intelligence technologies in what could be the biggest gamble of shareholder capital since the dawn of the internet 3 decades ago. In the coming years, AI-related technologies are expected to drive revenue gains for nearly all the world's biggest tech giants, as companies look to leverage their massive datasets in order to enhance sales of everything from drive-through dining to the most complicated pharmaceutical testing. Tapping into those data requires big investments in computing infrastructure, often based in virtual cloud computing environments, which are built and managed by so-called hyperscalers like Alphabet's Google Cloud, Microsoft's MSFT Azure, and Amazon Web Services, AMZN. And with AI potential now unlocked by the advances in chip design, speed, energy consumption, and costs, these hyperscalers are seeing perhaps the biggest demand surge on record for their essential cloud services. Building and maintaining those networks, however, comes at a steep cost and requires investors to take a leap of faith, and companies such as Google and Microsoft are committing to spending billions while generating only a relatively small amount of revenue from their AI-focused products. Capital expenditure is the new big tech focus. That puts the topic of capital expenditures, or CAPEX, at the heart of the AI investment story, and cements the market leadership of chipmaker NVIDIA, regardless of which tech giant emerges as the hyperscaler of choice. NVIDIA CEO Jensen Huang, in fact, sees the data center market growing at $250 billion a year, on top of an installed base he estimates is already valued at $1 trillion, as companies like IBM and Alibaba Cloud mount nascent challenges to their larger rivals. Microsoft Copilot and Google Gemini have been advertised as AI-powered productivity tools. But Ethan Mollick, a leading AI expert, has a more cynical view of the products. Copilot automates middle management while Gemini makes surveillance easier, he told WSJ. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty, nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you're looking for a job or an employee. Thank you for watching.